Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the lab today. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. It's based on structured trades, and these trades are available to all of you in the Trader Lab at no cost. This stream is about the business of trading, how to get in alignment with the market at times, how to vet trades, build out a business plan, and potentially create a career path for yourself and sustainability in this business. So the question becomes, are there really trading secrets that need to be revealed so you can become a profitable trader? Is it really a secret, or is it right out there in front of you, and all you need to do is reach out and grab it? I'm going to try to answer those and many other questions today and also every day in this stream about the reality of trading, how you can adjust to the randomness of the environment we're operating in using structured trades that you need to reverse engineer, make them your own, and also give you an open invitation to the Trader Lab community, which is a group of like-minded traders who've come together to leverage their collective experience. The business of trading requires data mining, psychological alignment, a reality check at the door. You're not in Kansas anymore. This is a completely different environment. And you cannot, in my opinion, and based on my experience, try to bend this business and this environment to fit your psychological needs. What you need to do is understand the business, develop a business plan, learn to follow it and not bend it to your needs, but you need to adjust and change your beliefs and your operational process to align with this business. And if that makes sense to you, are those really the trading secrets that'll be revealed today? Or is it always right there waiting for you to reach out and grab it? I'm going to try to answer that question for you today and every day here in the stream. And thanks for visiting the Trader Lab community. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this isn't a trade calling room, but if we get to real time, we'll talk. The other thing is, be advised, I am streaming from Costa Rica on a very unstable environment. I have a dying laptop, poor internet connection, and power surges. I don't know what else I can get other than maybe a full moon. So with that being said, if I do drop out, I will recycle. It can take maybe up to 5 minutes. If you're visiting in YouTube, it will come back. Just stay put. Also, in TraderLab, could you please post the link to YouTube in TraderLab? And hopefully you guys are hearing me okay. Can I get a audio and stream check in YouTube and the Bookmap Discord TraderLab community? Thank you, Marty. I was wondering where you were today. How are we doing in YouTube? Are we okay? Okay, thanks, Gig. Okay, thanks, everybody. Appreciate your patience. By the way, if you are in YouTube and you have questions, I'm not able to see the chat since I'm limited to my laptop monitor. All my external monitors are not working. Neither most things are not. So I'm going to be able to answer your questions specifically in the Bookmap Discord TraderLab chat. I'm using that. I can see that on my phone since I have no other way to access the chat. So there is a link in the bottom of YouTube. If any of you are interested in visiting the TraderLab community, there's no cost for it, but you just have to confirm your Discord username. You don't have to be a Bookmap subscriber to take advantage of TraderLab and all the additional resources that Bookmap shares on trader education. Interesting thing about Bookmap, it invests in traders before it asks you to invest in Bookmap. Kind of an interesting thing, isn't it? Because if you're successful, it's also Bookmap's success. Okay, let's get going. I'm going to go over the higher time frame very quickly, and then I'm going to show you specific trades that are part of the TraderLab process. And I always kind of laugh when I go online and I see all the hype about the only one thing you need, or the three things, or the secrets revealed. So I figure I'll do the same thing today. I'm going to reveal secrets too. Why not? The only difference is there is no secret. All of this is available in TraderLab, and it's been condensed and put together so it can be an efficient distribution of information and process. None of us has unlimited amounts of time or resources. So if you've been wasting your time and chasing the illusion of the only one thing you need, I'm going to suggest to you, stop now, put the brakes on, and as they say, wake up, smell the coffee, because the information is out there. But your FOMO to find the quick fix to random outcomes is going to keep you trapped in a situation where you cannot break out of that. Your FOMO drives you, but FOMO is the problem on all levels. So let's talk about the trading secrets, okay? And this is no secret. Now, this is Friday last week. If you remember, this is the Greenland fiasco. The Greenland, we're going to take it fiasco trade. And this is the maybe not so much trade. And this is a couple pieces happen here. Remember, market mechanics. The market goes up to go down. And why does it go down? Because there's longs in the market. If the market goes down, then what is there? Well, sellers, of course, but what's above the sellers? Buy stops. That means there's buyers in the market built in. If I trap the shorts, and this is on the news that we didn't really mean it with Greenland, now we get the reversal. We have the gap, and what's in this gap? There's shorts all the way up here. And where else? Up here. Now, this is Friday. Now, what was interesting about Friday, it really set up everything you see happening right now. And here's what the deal was on Friday. We had a wick, and the idea, and again, this is all in previous streams, but it's important how you see how things build on each other. The idea was to come down under here, get into this wick, get more shorts in here. For what? To go up. Well, instead, we couldn't get down in here, yet we had some long liquidation. Now, here's a key piece. In this consolidation, from this swing high to this swing low, the highest volume is here, and that's called balance. Now, the thing about balance is, think of it like two sides or two armies. It's just one way to visualize this. You've got the sellers up on this side, and you've got the buyers down here. And you'll notice it's kind of coming together. And this compression of energy, buyers underneath, sellers on top, suggests there's going to be a breakout and a potential move. Now, the suspicion, and that's the word suspicion, is this is the current RTH all-time high. Does that look excessive to you? Well, it didn't look excessive to me. And there's another piece to this. On this day, we had a bullish report. I think it was CPI, and in the ETH, we made a new all-time high. Those highs have a tendency not to stay around because the cash wasn't open. So that suggests everything, at least to me, unless, of course, a fundamental input or something changes, is up. Now, the thing is, trading up from where and how. So that is the, quote, dilemma. Let's look at how this might resolve itself. Now, I'm going to take you forward one day, and these are RTH candles, and this is auction market theory, the volume profile. Now, you see these yellow boxes here. This yellow box is where 70% of the volume took place on this day, RTH. Now, you guys who look at candles, that's fine, but what does it tell you? Are prices equal, and is the distribution of volume the same? Well, and this day and this day, you'll notice they overlap pretty much, but value, where most of the volume was moving higher. Now, in and of itself, it doesn't, quote, predict anything. But let's use a different term. It suggests something. Now, in trading, the best you have is maybe. So maybe it'll do this, maybe it'll do that, maybe it won't do anything. Who knows? By the way, why would I say maybe? Because I'm not someone who's ever going to insult you by saying what it will do. I will always say, here's what it might do. And based on what it might do, we can get ahead of it and anticipate behavior. And then when we see behavior that we have anticipated, then we can have trades structured that are waiting. It's like waiting for a bus. If you anticipate the bus is going to come to the bus stop, the right bus shows up, then you take your chances, as they say, and you get on the bus. Now, this is moving higher. You'll notice how we closed down here, but the volume is up here. This was Friday. Now let's look at yesterday. What do? We open, we test the high end of value. This is where in each of these days, 70% of the volume took place. And on Friday, higher. So support. Now, if you didn't understand the auction or the volume profile, you wouldn't know. This was long. Now, what else do we know? There's more. What else do we know? There were buy stops above this high, buy stops above this high. That's called fuel. What else do we know? We know on this day, there was high volume or a retail price. Remember, shopping right here. What else do we know? There's buy stops above here. And what else do we know? There's buy stops above here. And what else do we know? This is the RTH all-time high. Now I'm going to show you one other thing, and I'm taking time here because I'm going to show you a similar process going down in time frame. Now, this is called the naked volume point of control. What it is the highest volume. You'll notice when we came down here on this day, we tested the highest volume. It's too low. Trading is shopping. If you know how to shop, you already have the fundamental basis of trading, and that is what's too high, what's too low, what's retail or fair. And it's represented by volume. You go shopping, if it's on sale, it's not going to stay on sale. Even though the price dips down and you're going to throw 20 cans of tuna in the cart, it's not going to stay there. It's going to come back to a fair price. But what happens if this price over here, when we come down, the previous fair price is now too low? It was too low over here. This is now the fair price for this day. And I check, I go higher, run out of buyers. Let's be sure. You see what I'm saying? Too low. Then we have news. And this is Martin Luther King Day. So that changes and scrambles the input. Then the news is taken back and the auction continues. And we return back to the last place. That was a fair price. If I get above here and stops, this is the last fair price. If this is now too low, forward the light brigade. Does that make sense? Now, let's just take a look and see where we are today. Now I'm going to show you the structured trades. And what do we know here? Wasn't this our value area high, too low? What do we know here from yesterday? Value area high, too low. What do we know from this day? If I get above it, too low, too low. Through here, hasta la vista, maybe new all-time high. What do you think? Is this a mystery or a secret? No. So why is trading so difficult? You have to stop chasing the illusion, in my opinion, and become disciplined and develop a plan. Now, let's take a look at our context spreadsheet that I've shared in TraderLab. And by the way, don't forget, if I do crash, I will disappear. I'm in an unstable situation here. If you're in YouTube, it will recycle. I cannot see your questions. Unfortunately, I only have my phone and I'm watching questions in the Bookmap Discord TraderLab chat. That's all I can see. So apologies. I'm going to try to resolve this by next week. I'm leaving Costa Rica, going back to Chicago. From 89 degrees here today, Fahrenheit, to 5 or 6 degrees Fahrenheit. That's what we call a cold codfish in the face. So we're opening in yesterday's range. This is the RTH open. There's yesterday's high. This is the overnight volume point of control. This is the retail price from the last auction, which is the ETH. This is that value area high. So let's get some statistics out. And past performance is not indicative of future results. If we're opening in range, but out of value, what does this say? I'm on my grid sheet, first of all, that we're anticipating either an overlapping day or something called a normal variation day. And then the next question is, are we breaking out of the prior day's range? Well, the prior day's range is right here. If we break out of the prior day's range, what do? We trade in the direction of the breakout because the potential range is unlimited. Why might we do this, you're asking? The market is rejecting the former interpretation of value, and that is the value area. Now, if we know this, and if you're in TraderLab and you're organized and you have a plan, here's what you would do. Now, we're going to grab our statistics, and this is how you might put a plan together. We're opening higher inside of yesterday's range. And I think you might say, and here's the other thing that's important. In the ETH, this is the highest volume. Remember how this works. This is shopping. Well, if yesterday's RTH volume point of control is here, the retail price, and that's inside of value, and the value area high, inside of this value area, 70% of the volume took place, and I open outside of it. Does that mean maybe this is too low? Value area is important. Yesterday's high. Why are we up at yesterday's high? Overnight volume point of control. Same as that naked volume point of control below us, except maybe it's too low. This now is the new retail price. And what else? The ETH high. What do we know about the ETH high? Here you go. Grab a pen and paper, write these down, and you have to vet these for yourself. ETH high or low, there's a probability almost 98% in this configuration of taking out one of them. Which one do you think it's going to be? The ETH high or low? I'll leave that up to you. Checking the previous value area high or low. There's the previous value area high. What is that? An 89% probability to check value area high low. But look where we're opening. The overnight volume point of control, 81% probability to check there. Checking the previous high or low, 82% probability. What do you think about that? Getting to the overnight mid, 75% probability. Taking out the first hour's high, 66% probability. So before it opens, if you're in TraderLab, you now have the higher time frame. We have evidence that the shorts are going to be trapped. We know we have a weak all-time high, and the ETH high was not auctioned during the cash market, which makes it not a real all-time high, which of course doesn't mean it can't be, but probably not. Put all those pieces together and the evidence, right? Now what? Now, structured trades. Hope everybody's with me. Appreciate you guys visiting TraderLab today. If you're in YouTube, let's take it. Let's do it. And again, let's follow these structured trades. Okay, so RTH open, yesterday's high, high probability, overnight volume point of control, high probability. ETH high, which is up here someplace, high probability, and value area high. What do? Great question. What do I do? Wait. Why? RTH open, going to be fast. I'm going to feel FOMO, and I have structured trades. Why? Because I'm an emotional being. I'm stimulated. I don't want to miss it. That's all FOMO. I know myself. I'm human. You do too. And you're going to say, I'm not going to do it. And then in the moment, it's all gone. Why? Chemicals in your brain. How do you manage that? You got to know what you're going to do. not what the market's going to do, because you can't. This is where the trade plan comes in. So for me, I have statistics, and I know I can check value area. And what happens over here is very important. So what are my statistics? Overnight mid, value area high. What do I have? Overnight mid, value area high. 89% probability to check value area high or low. Overnight mid, 75%. So for me, longs. Where? Clueless. Except I can't do anything because I don't have a trade here. On the open, I checked yesterday's high. That's a high probability target. I still have 82% up here, and I have a high probability over here. What do? Do I buy it here to go for there? There's my liquidity. Or do I wait for something called responsive selling? What is responsive selling? Those who are long from yesterday who are going to take a little off the table. So they respond. But what is the trend? Well, it's up. What do I want to do? I like to get aligned with the trend. So I'm not looking at shorts. They're the weak side. Who's getting squeezed out? Certainly not the longs. So what side do you want to trade? Well, I don't know about you. Me, and let me show you this now. I'm going to show you the actual trades that you would take if you vetted these in TraderLab. And you don't have to take any of these, and they may not be right for you. Of course, this is time frame specific. But since we are day traders, the idea of being a day trader is alignment in multiple time frames. And also, if there is a dominant side, in my opinion, there's this thing called risk-reward ratio. Where is my reward? Is it fading the trend, if there is a trend indeed, or what is it? Well, the range will be on the side of the dominant side. If I know I've got the shorts caught, do I want to fade it? Now, I'm not saying you can't take what's called a counter trend trade if you have an edge, but for me, if I see counter rotations, I want to use them to get in alignment with the dominant side, if I can recognize it. And of course, I'm going to get out of alignment, right? Don't we? Let's take a look. So this is a buy sweep. Now, what we have here, and I'm hoping this is accurate, because I did have some data lag. I always have data lag here in Costa Rica. It's just it's like pushing data through a pipe down here to Central America. By the way, I've got an ant crawling on my screen here. Okay. So I see the sweep, and I'm in the middle of nowhere for a trade. Now, the market can do anything, and my FOMO is triggered. Why not? Do you think any of us don't have emotions? We do. So I see what's called an open auction. Now I come down here. Let me show you this. So I'm reading the order flow. This is the beauty of having a high tier order flow tool like Bookmap. I'm looking at this and I'm going, I want to get long. And now I'm seeing this. So I see my sellers here, and this is delta. Now this can be shorts, I don't know, could be stops coming out, responsive sellers, but my location is here. So now I have two-sided trade. And when this rotates up, I think I'm missing it. And because I have this probability about 82% up here. So I'm going right there, right here, I'm saying to myself, it's going to go up without you. What's that? Hindsight and the lunatic under the hood that I call Hyde. Jekyll and Hyde. Hyde's the lunatic. The one who, in hindsight, scolds you, right? So what do I see here? Liquidity is in the book over here. So now I'm looking at the order flow and I'm saying as well, what happened here? Here's what happened. Sweep suggests downside rotation. Buyers are here. Sellers are here. My downside rotation is larger than my upside rotation at the moment. Buyers are here. That's because of this. And I don't know until I get over the sellers that are there. There's my buyers. There's my up leg going to the moon. What happens here? My sellers are back here. So I had sellers here, sellers here. No way to know. Let's get over it until here. And even here, It can keep going, but when I come back to where the sellers were, you see the buy delta? Why does the market go down? Because there's passive sellers. If I come up to the same location, now I'm in a bit of micro here for you, and the same green bubbles are here, and as far as I know, just going to go. But then I get the down rotation. What does it tell me? Language, sellers are here, break low. So I know where my sellers are. They're up here, break low. Now when I come back, these sellers are here, break low. Now when I come back, these sellers are here, break low. So I'm reading the order flow and the microstructures. Everybody with me? I'm in the micro. I'm not going to trade it. I'm reading it. You guys you need to understand what you're looking at. This is language. What we're attempting to do is translate a language in real time, and it can be fast, right? We're in here 2 minutes. So yesterday's high, okay. Why aren't I going up? Because I got some buy stops here. So where are my buyers above yesterday's high? Well, where are they? Instead, I'm seeing the sellers. I'm seeing the sellers, and I have my liquidity, and location. So I'm sitting here with my jaw on the ground with everybody else, looking for the long. Where's my sellers? They're still up here. Let's see what happens. I get my stops. These sellers are still here. You can see them there. My sell stops are under here. By the way, this right here is a double bottom. Now, you guys know about double tops, double bottoms. They are weak structures. I forgot to mention this. When I was looking at this, I saw this and I said, well, that's weak. So right there, I'm not getting involved here. I'm looking for this to get picked, and I still have liquidity, and I've got location. So I'm still waiting. Now, watch. Right here, I call this a stop pick. I have buyers here. I come up, and right here is a possible buy trigger. The sellers are here, so now I'm stalking it because there's no precision. And I know if I get long anywhere, stop's got to be down here. So right here, sellers are here. The sell delta is here. The buyers are there. The buyers are here. That's why it went up. Sellers are here. That's why it went down. Sellers are here. Sellers are there. Buyers are here. Watch. Sellers are here. Sellers are here. No clue. This is the first long. It's going to set up here in a second. Watch. Interact with the liquidity. Sellers are there. Watch. Right? I'm still looking for the long. I'm into the liquidity. And now I have my location. It's right here. And again, no idea, Let's look at the change. Going down. So here, sellers are here. Sellers are here. Buyers are here. I'm looking at the long. I have the liquidity. I have the absorption. Right here, I'm still looking for the trigger. So I'm looking at a trigger here, no trigger. I'm looking at a trigger here, no trigger. I'm looking at a trigger here, no trigger. I'm in microstructure. I'm taking time. I want you to see how I put this together, and you can learn this. The whole point of TraderLab is that there's no magic here, guys. It's just patience, probabilities, and plan, and something from the world of real estate. Location, 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 patience. Going to zero. Support. Resistance. There's my sellers. There's my sellers. Break, support, absorption. Looking for the long. Break low. Gee whiz, Tom. What happened? I don't know. Resistance. Order flow. Trigger. Resistance. Support, location. Statistical probability. I went over the statistics at the now, look at the behavioral change right here. Liquidity, location. Notice a change. This is the trigger. Now, let's look at the trigger together. order flow, break low, absorption, location, break high. This is your trigger. This is your long. Your stop will go under there. This could be your scale right here. This is called mean reversion. And there's another option here. 82% probability to scale there. This is your first long. Now there's more. Now I'm going to show you the sequence of TraderLab structured longs. And I haven't seen anything after around 10:20, so I don't know what's going on. Except we're going for all-time highs and higher, never know. Watch. This, so now we have yesterday's high, which would be a potential target, but this is 82% probability. Right there. So long potential scale there, if you're using this one, this is called developing volume point of control. In the developing time frame, that's the highest volume. It's called the mean. If I go to this one, which is the same in the ETH, 82% probability, I could just take it there. Why? The trend is up. Let's keep going. I'm going to show you structured trades. There's more. ETH high, over 90% probability. So you can be, oh, I meant to tell you about this. This is something interesting. I want to tell you about this. This is also another long. Now this one is a little more advanced, but let me tell you what it is. We have a trade called VWAP VPOC, and this is the VPOC. However, this is a VPOC. So when early on, and I'm going to put a couple pieces together, if I know I've rejected value, it's too low, and I'm above yesterday's high, and this is the last auction. If I choose, when we pull back, so this is the first long, this could be a VWAP to VPOC trade or an add, or it's this. So here's what you got. This to there, or this to there, and this to there. Structured trades. And then to here. Why? ETH higher low, 97% probability. Pick one. Let's keep going. Now what? We have that naked volume point of control. Previous retail price, that was too high. Next target. Subject to your plan. Oh, and here's another one. This is a structured trade in the TraderLab. Mid VWAP, and where you're going to try to go is there. Now, this is also a structured trade. So here's what you would have. This to there, this to there, to there. These are all structured trades. This is another long here. Let me show it to you. These are, and I'm just ripping through this. This is called an order flow trigger, and it's in confluence with this and this. This is another long continuation trade, and you have to, of course, manage your trade. We have a previous high here, which is a target right here, and then it's either runners or you're out or whatever. Now let's come back and look at the higher time frame so you can see where all of this came from. Where's the fuel? Remember? It was there. That was yesterday. This is the retail price from here. Where's the stops for today? There and there. Then we have the RTH all-time high and then the ETH all-time high. Subject to your trade and your trade management, you could be done here, or you're holding runners and you're just sitting in your Barca Launcher. That's the secret of trading. What is so secret about this? Can you learn this? Well, this is what the TraderLab's about. Learning to trade, being realistic, and not looking for the Holy Grail. It doesn't exist. Let's see what we got going on here. VPOC migration. All right. What do we know? we have this, an outside edge. This is an area of support right here. If we get down in here, not a recommendation. I'd be looking to get long continuation trades up here and possibly back towards this high. I've gotten the primary fuel out, which are the stops up here. And you have to always think from two sides. We have longs in the market. If I run out of buyers up here, I can counter rotate into the stops, which are here, here, here. So this is counter rotation. Now, in an uptrend, if you accept that maybe the trend is up, and then in the shorter time frame, which is kind of what we trade in, which is rotational, then if we think the trend is up, then we can use this behavior of counter rotation and stop pick. Come outside. We know there's going to be stops here, and this is a good reference point. It's an outside edge. So, and we have this. So this is, and we have the IB. So we have several trades that might set up here in the TraderLab that are long continuation trades, and they're not recommendations. Out here, back to there, out here, back to there, and then out the top. Not a recommendation. Those are structured trades. Now, when I say it's a structured trade, remember how this might work. It's location and it's behavior. What is the behavior? Why does the market rotate? It rotates because most of the time it just can't move like a bullet. Most of the time it can, but most of the time it rotates. And then, because let's say the buyers were here, if it counter rotates, the buyers may come back here. Why did this get above these sellers? Because the buyers, it's like Pac-Man. If they eat up the sellers and then we come back, these buyers that overpowered the sellers can come back in here. It's no different than here. The sellers were there and we went down. But where were the buyers on the other side? They were here. So the buyers that absorbed these sellers came back over here. But what happened to these guys? Hasta la vista. Thanks for playing. This was only counter trend, you see. What is this? Counter trend. And what is this? Well, maybe counter trend. I don't think we can say it's the trend yet. So if the trend is up, then what? Now, we do have POTUS scheduled for a news conference in about an hour. And whether or not we're going to continue higher before that is always a question, because that can give you a fundamental input that can disrupt the auction. But in the meantime, we trade what is presented to us based on our plan, not anything else. You can't predict the market. I can't predict the market. But what I can do is understand how the market works, why it does what it does, where it might do it. And then if I understand these things, wait, not chase, manage my emotions, which are the same as yours, which is I don't want to miss out, FOMO, or why didn't I get out here? It's so clear in hindsight. And who berates you, by the way, if you're sitting here looking for that and now you get this? I shoulda. How can you shoulda anything in this business? Here's the shoulda. You shoulda follow your plan, not judge yourself or criticize yourself. That criticism comes from Hyde, Jekyll and Hyde. I call it Hyde because I had to give him a name. And you can make up any name you want. But you know the story of Jekyll and Hyde. Dr. Jekyll's a professional physician, brilliant, analytical, a real pro. His other side of himself is Hyde, a lunatic, emotions. It's the same thing that the Incredible Hulk was built on, same concept, out of control emotions. Well, both of those are part of our personality types and our primal wiring. So the hindsight and the self-criticism is coming from Hyde. It's depreciating you. And that is feeding your need to be right, and it feeds your impulses and your lack of control. That'll take you out of the business. The control you have ends when you push the button, when you click the mouse. It then is all random. So the only way you can deal with this emotional state is to have a specific plan and locations where you will participate. And then if you have a trigger that you have vetted, you put the trade on, and then whatever it does, it does. Now, we know out here is the next potential area. And we know, and these aren't recommendations, that this was the last long. We know that when we take this long, that the stops that are there is the next target. We know that. And after that, we don't know anything else. Okay? Now, and even when I know this is the target, I don't know if we'll get there before going lower. Isn't that the truth? So if I know that, then you know it. So you know what I know. Not what will happen, but what can happen and also what might happen, but never what will happen. So if we can operate in this environment of I know, I don't know, here's what might happen, here's where it might happen, and then I have triggers that I've vetted, that I know when to enter the trade, I know where my risk is to, does it fit my parameters? In other words, enough range to potentially get risk neutral. And then do I have a statistically based or probable target based on market mechanics, which would be there. And you see where we got. Why would it go there? Because there's buy stops. Now, what is over here? Sellers. Who are the sellers? Well, if you're in TraderLab, maybe you'd be a seller there, or maybe you wouldn't be. If you're in TraderLab, maybe you'd be sitting back and sitting through a counter rotation if it fits your plan and your psychology. Me, well, I have a different psychology than you. I might be out of this trade here, right in front of this, and that leave the rest for someone else. Or, depending on the number of contracts I trade, I might have a runner sitting here going for the all-time high, going for the ETH all-time high, which is on my chart. Or I'm done for the day because of POTUS and because the market is now long. If the market's long, then the longs can go on the hook. Think of it this way. If the market's short, the market goes up on the buy stops. If the market gets long in any time frame, as you think of it, the market can rotate down on the what? Sell stops, market mechanics. So you can learn this in TraderLab. I mean, is this one of the great secrets finally being revealed? No. It's just, why don't traders do this? Why don't traders learn a methodology that's logical and is not complicated? Now you're going to say, well, trading is really complicated. Well, is it true? Or is it that we think if it is complicated, that somehow we're going to extract what everybody else has walked in our shoes before us and who has failed doing the same thing? Is it because it's complicated, or because maybe we're approaching it the wrong way and we're thinking we're going to get an outcome that's different from everybody else's outcome? It does the same thing. Why would we believe that? Now, there's a lot of great marketers and influencers, and I look at YouTube and I see these things, secrets revealed. That's why I thought today would be trading secrets finally revealed. I mean, is it? No, there is no trading secret. What is it? Organization of information, culling out the noise and the nonsense, getting it down to its most basic elements so you can reduce conflict in your process. I built trading systems, and at one point the only way I could solve for a lot of inputs was optimization. So a lot of you guys, what you do is you put a bunch of stuff together and you see random winners, of course, and somehow you think in that randomness is profitability. Well, everybody has random winners, so what is that? In the casinos, gamblers have random winners, right? Casinos pay the gamblers. They have random winners. So, but why do the casinos extract the dollars even though they pay the gamblers? It's because they have something called edge and a plan. The edge is playing the game exactly the same way because statistically they extract dollars from the gamblers over a random distribution of outcomes. I mean, that's really the business, right? Guess what? We're in the same business. So if we can change our beliefs and also change trying to mold trading to our needs, to be right, to get approval, to be smart, oh, it's so difficult. Well, no, it's not. It is emotionally difficult, but learning to trade is not difficult. Doing it is difficult because most traders are playing a video game. They don't realize they're in a business. So if you approach it like a business, then you can start nailing down structure, and then you really just show up and follow your plan. The arbiter of right, wrong in this business is plan-based, not the stop on the last or the next trade. The stop is just money management and overhead and cost of production. How do you experience it? I know how I used to experience it. It's like a personal failure. Why didn't I know? Or then I get stopped out, and then it eventually goes on, and I go, I knew it was going to do that. Well, I figured out I didn't know anything. In fact, psychologically, I had to change the need to know to the need to know I don't know. And that is liberating. Because if I can't know, why would I try to build a career on needing to know and needing to be right and avoiding risk? I mean, how can you do that in a business where you exchange risk for outsized opportunity? Isn't it kind of a conflict? So we have to try to remove the conflict and learn how to operate in randomness. And that's what's going on right here, randomness. So where's the stops? They're under here. Where's our outside edge? It's going to be out here. Could you be done with the longs and back in your Barcalounger? You certainly could. If you were still holding, where was the last buyers? They are here. You might be out of your runner then, but you would already know this. Now, the next area to be looking at is going to be out here. Now, the other part to this is you also don't need to do anything. You could just be done. Now, do you feel like you're compelled to do something? Like you need to do something? Are you just mechanically going to buy this or this? These are outside edges, but I noticed the long